Our next presenter is Karora Resources, and presenting on behalf of the company is Chairman and CEO Paul Huet. Paul, over to you.
Thanks, Derek. Good morning, everyone. Hope you're enjoying the beautiful day here today. Michelle, if you would happily help me switch to the next slide here, please. Thank you. Just our forward disclaimer. Skip again, please. Skip again one more time. Thanks very much. And there's our famous Father's Day course gold. The only thing I'll say about that is the one thing we have done here very well over the last 12 months is we've made sure through our efforts on all our cost savings with respect to G&A, vendors, royalties, all those steps we've been working so hard on for 12 months. We've made our operation not rely only on this coarse gold. While this is a huge blessing, and we love encountering coarse gold, our operations at Beta Hunt is very profitable without it. And that's a very important metric since acquiring that mill, and a big change in our company that we're very, very proud of having accomplished. And look, it translates into the cash and the balance sheet. If you look at where our cash position is now, and you'll hear me talk about it in the next coming slide. So just a former shot of the coarse gold. Next slide, please, Michelle. Our location, Western Australia, one of the greatest jurisdictions in the world. I don't think that needs any more introduction. Next slide, please. We're going to get through these slides pretty quick here. I've got 15 minutes, so I've got to get into the ones that are more meaningful for our people watching here. So myself, Paul Huet, joined as CEO a year ago now, chairman 3 months before that. Graham Sloan here, which is a very important part of our team that we've been talking about for a year now. Graham, a native to Western Australia. He's from the area. He knows the people. He knows the permitting, has a strong commanding understanding of capital markets. Graham was the former CEO of Perseverance, who built the Fosterville mine. He's been CEO of 2 other companies as well. So not only is he very strong operationally, but he also understands capital markets and what we're here to do. At the end of the day, we are here to make money for our shareholders. Everything we do, every step we take, everything we're pushing forward to accomplish as we grow the company, build the company, take it from where it was, is so that we can have a return for our shareholders at the end of the day. That's what matters to us. Next slide. So how have we done that? Let's just talk about it. The next 2 slides, one will be talking about some of our corporate successes. And recently we sold off the 28% of Dumont. So we're 100% focused on gold today. And that's something we've been working along for quite a while. We've been sending that message that it is something we wanted to achieve, and we're there now. We sold it for up to $48 million. We used the initial $10 million that we got for it to pay down some of the royalties that we had bought off from both Morgan Stanley and Maverick. So a very good use of those proceeds that we got when we sold Dumont. But more importantly, I think people underestimated just how expensive Dumont was. We only owned 28%, but we were paying a lot more than 28% in the fixed costs. You know, it was one of those areas where we said we were going to reduce G&A. By selling off Dumont, we have managed to successfully reduce G&A for our shareholders. Recently, we just posted our cash position after another yet strong quarter of right around 25,000 ounces. So cash is just under 70 million at $67 million. You know, at the end of the day, that really is our report card. When you look at where we are, a year ago, this company struggled with cash. Let's just be honest here. We were very, very tightly constrained. We had negative $8.7 million in working capital a year ago. Things were very tough for us. We managed to buckle down, stay focused, and deliver 5 consecutive quarters right at 25,000 ounces. Our institutional shareholder base is continually growing, and that is helping us a lot. I think I was talking to people the other day about where gold is going. I'm a firm believer that gold is going up. I think there's a buying opportunity, if anything, now. We've managed to deliver on those promises we said we'd do. I think you see right now a good buying opportunity. There's obviously some volatility from the U.S. elections that I don't think anybody can deny. Once that settles down, it'll be interesting to see what happens to our sector. We completed the 4.5 to 1 share consolidation that we had gotten approved by our shareholders. The actual approval from the shareholders was an 11 to 1. That was just too steep. We did some metrics, and the 4.5 to 1 seemed like the most appropriate. And what we saw from that was some good buying from, yet again, more institutions who are here for a lot longer. We appreciate all our shareholders, whether it's institution or retail, but having that base of institution is really important for us at all times. So now we're sitting north of 55% of institutional shareholder, which is a huge change from 12 months ago where it was probably less than 8%. So again, that's very positive for us and the future for us. I just want to recap the fact that we did finally get to an agreement with Mavericks. It took us a lot longer than we expected, but we're happy for them and our shareholders and for the future of Beta Hunt. Having that 37% reduction is going to be across the entire future and the drilling that we're going to have from that. And then the Morgan Stanley one, we all know that the NSRs are completely eliminated. And that's a big step in that large land package. And I want to get to that because we have a lot of drills turning today. And we've got a lot of exciting news coming up in this quarter. So I've got to get through these slides so I can start talking to you about it. Exploration, first and foremost, has increased by 50%. Our goal at the beginning of the year was $9.5 to $10 million. We're increasing that to $15 million now. So that's a 50% increase. We've got 7 drills turning today. 2 of them at Beta Hunt, 3 of them at Higginsville. We're having one on the lake in some other areas. And then we just started one up in SPARGOS, that asset that we just closed on, where we used cash to settle that purchase of SPARGOS. So I'll talk more about SPARGOS afterwards. So let's go to the next slide, please, so I can talk about some of the operational stuff. That first slide was just talking more about some of the corporate things where we're focused on gold, resolve the royalties, the 4.5 to 1 share consolidation. Now, operation, if you look at this slide, there's 2 bars on the top here. The blue bar, that's demonstrating each quarter since acquiring the mill. Since we bought the Higginsville mill, we've had 5 quarters. And look, we've consistently delivered at 24 to 25,000 ounces. Look, I've been in mining 33 years. 33 years. It's not easy to consistently deliver 24 to 26,000 ounces quarter after quarter after quarter after quarter after quarter. And we've managed to do that as a new company. We are a new gold producer. We just got the mill last year. We put together a team. We put an operations team together. We're delivering consistently 8,000 ounces a month today. Are we satisfied? No, we're not. Where are we going to go? We're going to grow from here. How do we get there? We've got a strong cash balance sheet now. We're looking at, we've been very transparent from the beginning, looking at ore sorters. Look, we're faced with several situations with the rest of the world with respect to COVID, where we had a team come in, they had to leave. They're back now. So we are exploring ore sorters. We've been very transparent about upgrades to the mill. What do we need to do to go from 1.4 million tons per year or 4,000 tons a day to 5,000 or 6,000 tons a day? That would be a great use of our cash. Organic growth is certainly on the rise for us. We're by now between the end of the year, we're looking at putting out our new resource and reserve. Attached to that, we're really being aggressive here and hoping to get the plan for an organic growth plan that we could start demonstrating and pointing to. Again, I want to remind people it's year 1 here. So all these things that we've done are quite aggressive in this first year. And as a reminder, in this slide, you can see our guidance. Our guidance for our ounces were 90 to 95,000 ounces for this year. We're on track to deliver that. We'll likely exceed that. Our costs, our range was $1,050 to $1,200 all-in sustaining costs. If you look at the second gold bar here on this slide, people, you not only see the ounces we delivered, but the all-in sustaining costs. And 4 quarters in a row, we have consistently reported a reduction in all-in sustaining costs. That's not luck. That is an aggressive focus and us delivering again on those 4 things we said we'd do: G&A, royalties, vendors, productivity rates. From day one, we put that together, and we've been consistently focused on that to reduce those costs. Despite gold prices going up, we're still focused at getting our costs down and aligned. Our target was to get to $1,000 an ounce this year, which is something I'm very confident we will accomplish this year. The center of the slide is just showing our mill, 1.4 million tons per year. It's, again, as a reminder, that mill was built in 2009. It was $100 million to build. We picked it up for $50 million. We're feeding it from Beta Hunt today, the underground, and then Higginsville. Most recently at Beta Hunt, we have just announced several new discoveries, 2 new gold discoveries, and the first new nickel discovery, the 30C zone, in almost 2 decades here. So some pretty exciting drill results. And again, like I said, we've got drills turning not only at Beta Hunt now, we're drilling at Higginsville, Beta Hunt, and we've recently had a drill turning at SPARGOS, which I'm excited to announce some results at all the locations. Can I go to the next slide, please? And Derek, as moderator, I don't see a clock here, unfortunately, so I don't know how much time I'm into it. So if you can maybe give me the 5-minute bill.
Yeah, we're about 12 minutes in. There's, I'll give you a warning at 5 minutes left.
Yeah, do that, please, because I didn't start a timer and I don't see a clock, and I want to make sure that I talk about what's coming up here. What do we got coming in our future here? And that's this quarter. Again, a new resource reserve. If you look at this slide here, our total 2P reserve between our operations today, and one of them's a historic one. It's from the HGO, the 367,000 ounces. So the 2 tables here, if you sum them up, our 2P reserve is sitting around 600,000 ounces of 2P reserve. We're quite confident that number is going to increase significantly based on the drilling we've done already this year. That's going to come out this quarter. Coupled with that, we're going to have, obviously, our plan on how we grow from our 100,000 ounces a year and over time. So that is something that we're focused on, and we expect, again, to have that out this year here. Location of the operations here, we've got the Higginsville mill in the center. The Beta Hunt mine and SPARGOS here are equidistant from the mill. Next slide, please. Sorry. Oh, yeah, this is just a snapshot of Beta Hunt. Go to the next slide, please. There's some important slides here that I really got to get to, and I know it's tight for time, but so those of you who recall Beta Hunt was a nickel mine originally. We can take advantage of all those workings. There's over 400 kilometers of drifting in place here. This would have cost somebody over $100 million in sustaining capital. Every mine that I've been responsible for or I worked at in my career has had a sustaining capital of anywhere from $10 to $18 million per year in waste development. Look at the advantages we have at Beta Hunt. If you look at all these, this isometric view, those existing tunnels that are there in place will reduce our costs significantly. And there's no better example than the next slide, Michelle. If you look at this next slide, so between these 2 slides, the slide prior, it had 400 kilometers of drifting in place. If you look at the plan view on the left, shareholders and people watching this, the plan view on the left is showing the western flanks in A-zone. That's where we're currently mining. It's also showing the Alpha Island Fault. But what's important, if you look south at Alpha Island Fault, there's a cross section here to the right here, and the gray is one of those drifts that we're talking about, that I'm talking about. That drift, we've been putting in ventilation into those drifts, making them safe, reaccessing them, and channel sampling them. If you look at the results of those channel samples, we can see 14 meters of 5 gram, 2.8 meters of 23 gram. We fanned up. This is right off the drift wall, people. Look, this is a new discovery. This is a new zone, brand new. This is just south of our working. The tunnels already exist here. We're not going to spend $15 million in capital. We're going to reventilate it. Or add additional ventilation for the larger scoops, and we're going to reactivate these areas. They're going to be so cheap to get, or low cost to get back into operation. We're expecting probably Q1 of 2021 to get active in these areas. But if you look at the fan up, that entire district, that new discovery, doesn't only include gold intercepts, but above our heads is that new trough, the 30C zone of nickel that we've discovered. So in the recent drilling, since announcing the Mavericks royalty reduction, we have had 2 new gold discoveries, new areas. These are not existing. They're brand new gold discoveries at Beta Hunt. And when I keep saying the resource and reserves are coming out, these are going to be included in these new resource and reserve updates that will be increased, that will extend the life of the mine. The grades, you can see the grades on the slide. They're actually better than what we're presently mining. And we're going to be able to take advantage of that nickel. We've done a test. We did a test in Q2 of this year where we had 4 contractors come in. We mined 1 lot, 3,000 tons of nickel. We send it to BHP. It doesn't distract from our mill, but we're able to sell the whole ore to BHP, which is just down the road from us. And then we're able to apply that as a credit to our all-in sustaining costs. So going forward, you're going to see that happen quarter after quarter consistently, where we're going to be mining this high-grade nickel that varies from 2 to all the way up to 8% nickel that we're going to be mining, and adding that revenue to reduce our all-in sustaining costs. So it's important that our drills are turning. We do have a lot of news flow coming up. Next slide, please.
Oh, 2.5 minutes, Paul. I didn't want to interrupt you there.
Okay. So this next slide is the second new discovery. So I better skip through this because I do want to leave some time. So I talked about 3 discoveries at Beta Hunt. This is the third discovery, 2 golds, 1 nickel. And this is really important because I don't think this was picked up properly. I don't think people are really appreciating. They're like, oh, I didn't realize they've had 3 new discoveries since announcing the royalty renegotiation. That's pretty significant for any company. Next slide, please, Michelle. So over to Higginsville, as most of you know, we're mining a series of pits here. We're still mining Baloo that was supposed to be done months ago. We continue to find more ore at Baloo, and these are a series of 2-gram pits here. I just want to we've got about a minute. I want to get to the SPARGOS. So if you don't mind, Michelle, go to the next slide here. I'm gonna go through a couple of them pretty quick. Go to the next one. And sorry, one more, I believe. Yeah, so here's SPARGOS. We just closed on SPARGOS. We've got a drill turning now. We just started up. But just to give you a sense of what we're following up on and some of the opportunities that we have at SPARGOS. SPARGOS is that high-grade open pit that we paid cash for, $4 million, 60 kilometers from our mill, same distance as our Beta Hunt. Look at some of the results here that were intercepted. 14 meters of 46 gram. 14 meters of 46 gram in this open pit. The average grade of this open pit is about 3 gram today. We have drills turning in here, stepping out all over here, and we'll be giving updates to our shareholders on the drilling from SPARGOS, drilling from Beta Hunt, drilling from Higginsville, as we put out the new resource and reserve in this quarter, and put out a plan. It's either the plan for the growth will either be done this quarter. It could be aggressive. It could slip into Q1, but we're certainly working aggressively on this plan to show that we're not going to just stay at 100,000 ounces a year. So I see about a minute, Derek. So I'm gonna stop talking here. I did my best to try to get it wrapped in really fast. So just before I switch over, I just want to say to any shareholder who could be on the line, if I didn't get to some of your questions and Derek didn't, look, we're always open to having calls with anyone. We want to be very transparent with all our shareholders. We always have been, and that's going to be something that's going to be part of our culture forever. So I'll open it up for if you have time for questions, Derek.
Yeah, I think I think we are basically out of time, Paul. So I don't think we'll get to any questions today. But what I'll do is we'll pass the questions over to yourself and Rob, and you guys can follow up with the people that asked. We'll provide contact information as well.
Yeah, look, that'd be wonderful. And I apologize to those of you. But look, we welcome the questions that we'll get to them. We certainly will respond to your questions. So thanks, everyone. Thanks, Derek.
Thank you, everybody. And just as a reminder, to get to the next session, just log out of here and go over to the and pick the next selection on the page. Thank you very much.